Voice okay now? Audible? Clear voice? Screen okay now? Clear now? Okay. So we'll start today's class. Till previous class what we have discussed? No idea, ma'am. We were there in class, but we don't know. Is that? What we have discussed? Basics. So today we are going to start with our next concept, which is Companies Cost Records and Audit Rules 2014. Okay. Now, what we are going to see in this particular segment or this concept is we have certain rules for companies which have given in Companies Act. Okay. So this has been brought under Companies Act 2013, which is newly revised Companies Act. When we are looking for the genesis of cost audit, the last point we have seen in 2014. What happened in 2014? In Companies Act 2013, Companies Cost Records and Audit Rules 2014 was brought, isn't it? So this is that unit which is called as Companies Cost Records and Audit Rules 2014. Here what happened is, for companies, they gave certain rules. So what are those rules is nothing but what kind of companies has to maintain cost records, and for which cost audit has to be done, and who can be a cost auditor, what is exact cost audit is. There are certain rules. We have around 6 rules for that. So in this unit we are going to see those 6 rules, and we have certain forms. How those forms, we have 4 forms. Cost records and audit rules forms, we have CRA forms. So what are those forms and what are those rules? We are going to know about those in this particular unit. Okay. Before directly getting into rules, we have to know one section. What is that section? Is section 148 of Companies Act 2013. Why we have to know this section? You'll get to know. Because in this section, they have told us that central government can specify audit of items of cost in respect of certain companies. So what does the section 148 of Companies Act deals with? It tells that central government has certain power. What is that power? Central government can specify to certain industries or certain companies that this is how you have to do items of cost, or this is how cost audit has to be done, this is how cost records has to be maintained. So central government can specify how they have to maintain cost records, how they have to maintain cost audit. So this is covered under section 148 of Companies Act 2013. Okay. You're getting right? Understanding? Okay. So now we are going to know about section 148 of Companies Act 2013. So whatever I have given here are subsections. 148 subsection 1, 148 subsection 2, 148 subsection 3, 4, 5, 6, 7. And 8. We have 8 subsections in section 148. Now what are the subsections and this particular section is telling us? We are going to see one by one. Now starting with 148 subsection 1. What is this telling us is, central government can order certain class of companies. What are this class of companies are? Those companies which are into production of such goods, providing of services, such services as may be prescribed. Now what are these goods and what are these services will be knowing further. Okay. Now what are those goods and what are those services? We have a list called as regulated sector and non-regulated sector list we have. In that what they give? They have give certain products, certain services. If any product is covered under that list, then they have to go for cost records. If any service is covered under that list, they have to go for cost records and cost audit. Now, if any company or industry is into production of such goods which is there in that particular list, or they are providing services such as may be prescribed, they will be called as class of companies. So what the central government can do? Central government can order this class of companies to include in their books. What? Regarding cost related to utilization of material. Now how the material is being utilized in their particular production purposes, whether they are using underutilization or whether they are doing overutilization or whether they are optimally utilizing the resources. Regarding all those, cost information has to be included in their books. And regarding labor, now how many labors are there, how much cost is being incurred only for that labor, regarding that information also they have to include in their books, and other items of cost. Regarding all this cost related information, this class of companies have to include in their books. This order can be given by central government. This has been told in 148 subsection 1. So what is this telling? Central government can order certain class of companies to include in their books. What? Regarding certain cost. Now what are this class of companies? Which are into production or providing services of goods which are there in that particular list. Now what are the things which should be included? Regarding cost of utilization of material, regarding labor cost, and regarding other items of cost. These has to be included in their books. Now, some companies or some industries will be governed by some special act called as Insurance Regulatory Act, Banking Regulations Act. We have certain special acts, isn't it? So if any company or industry is covered by any special act, then they will be governed by a regulatory body, isn't it? Now, if any government or if for any company, government want to give order, which order? This order, to include in their books regarding this particular cost. If government wants to give order, before giving that order, government has to take consent from that special act or that regulatory body, that you are under this company's regulatory body, so you have to give consent to me that I can order that particular company to include in their books these kind of costs. So if any company is regulated by a special act or by a regulatory body, then government, before issuing any order, what they have to do? They have to take consent from the regulatory body. Clear? This is given under section 148 subsection 1. Now, what is 148 subsection 2? If central government is of opinion to do so, then central government may direct the manner of conducting audit of cost records of certain class of companies having turnover or net worth as may be prescribed. So, if central government thinks that this company is having a turnover or net worth limit exceeding the limit which I have prescribed. Now what is this limit? We'll know in the rules. Rule number 3, rule number 4, we have certain limits. Now if central government thinks that these companies are exceeding the limit which I have given, then central government may prescribe that this is the way you have to maintain the cost records and this is the way you have to do cost audit for those cost records. So the manner of conducting cost audit can also be prescribed by the central government. That power has given by section 148 subsection 2. Clear? Section 148 subsection 1 tells that central government can order certain class of companies to include in their books. Section 148 subsection 2 tells that if central government is of opinion, then they can prescribe manner of conducting cost audit. Clear? Now, coming to section 148 subsection 3. Cost audit shall be conducted by. Now, who shall do the cost audit? Only cost audit can be done by cost accountant in practice. So, he should be a qualified cost accountant. He should be in practice. He should be working in practice continuously, not coming and going part-time work and practice. No, he should be completely involved in practice. Then he will be eligible to become a cost auditor, who shall be appointed by board of directors. Now, how he will become a cost auditor? He is a qualified cost accountant, he is in practice. Now how he will become a cost auditor? Board of directors of that particular company will appoint him to be a cost auditor. Now who can do the cost audit? Shall be conducted by a cost accountant in practice who shall be appointed by the board of directors. Any other auditor of company cannot be appointed as a cost auditor. Cost auditor shall be appointed as an independent person only for doing cost records and cost audit. He will not be involved into any internal audit department. He will not be involved into any statutory related. He will not be involved into any financial matters. He'll only come and do cost records. He'll just verify the cost records and he'll do the cost audit. So any other auditor cannot become a cost auditor. Cost auditor cannot also involve into any other matters of the company. Cost auditors shall always comply with the cost auditing standards, which is standards on cost auditing. This is given as under section 148 subsection 3. Clear with 3? Now, coming to 148 subsection 4. Audit conducted under section 148 shall be in addition to audit conducted under section 143. Now, what is given under section 143 is whatever the powers, duties which are there for the financial auditor are equally mutatis mutandis will be applicable to cost auditor. Now in this section 143 we'll get to know regarding powers and duties of cost auditor. Now whatever powers and duties of cost auditor are there, he have to comply those powers and duties when he is doing his audit. That has been given under section 148 subsection 4. Clear? You have to remember the sections. Section numbers are important. We have only some sections in this particular cost audit subject. Okay? We don't have much sections. We have small sections, and I'll repeat it again and again so it will get registered in your mind. Okay? So, section 148 audit shall be done in addition to section 143 audit. Good morning, whoever have given me that good morning message in YouTube. Good morning. Now, 148 subsection 5. What is this 148 subsection 5 is? Qualifications, disqualifications, rights, duties and obligations. Sorry. Sorry. Now, what is given under section 148 subsection 5? Qualifications, disqualifications, rights, duties and obligations. All this, if it is applicable to any auditor of company, those will be as may be applicable to the cost auditor, that will become applicable to cost auditor. If there are any common duties, common rights, common obligations, if any person is getting into company, he has to comply with those certain provisions which are there under that Companies Act. Then those will be equally applicable to cost auditor also. Now, here to any auditor who is coming into that particular company, what will be the common rights? That he can have access of any books and records, and he can go to any place, he can ask any person regarding any information. These are the common rights which are applicable for all auditors, isn't it? Now, what are the qualifications? That they have to be appointed by certain categorization. Now, if they are wanted to be appointed by board of directors, they have to be appointed by the board of directors only. That will be the qualification. Now, what will be the disqualifications? Like common disqualifications, auditor cannot disclose any internal information to the outside world. So these are the common things which are applicable to all auditors, not only specially for cost auditor. If there are any qualifications, disqualifications, rights, duties and obligations which are equally applicable to all auditors, those will also be applicable to the cost auditor. That has been told under section 148 subsection 5. Now, what is the duty of company? If any auditor is coming, then the duty of company is to give full assistance and full facilities to that particular cost auditor for auditing the cost records of the company. Cost auditor shall submit his cost audit report to board of directors of the company. Now, who is going to be appointing that cost auditor? Board of directors will appoint. So, they will be the authority for cost auditor, isn't it? So, after completion of report also, they have to submit their cost audit report to the board of directors. So, this has been covered under section 148 subsection 5. Clear? Now, coming to 148 subsection 6. Company within 30 days from the date of receipt of cost audit report shall furnish it with the central government. Not only giving the cost audit report is important, that cost audit report has to be furnished with the central government with full information, like what all are included in that cost audit report. Regarding that relevant information also has to be filed in a proper form and statement. And they have to give explanations on reservations, qualifications obtained, which means whatever the result which is given in the cost audit report, whether there are any misstatements or whether there is any true and fair statement regarding each and everything, whatever the reservation is there, whatever qualification is obtained by that cost auditor, regarding all that information, they have to attach it with the cost audit report and they have to furnish it to the central government. Okay, clear? Having any doubts? So, this is section 148 subsection 6. Next, section 148 subsection 7. If after considering cost audit report, central government is of opinion that further information or explanation is necessary, then it may call for company to furnish the same within such time as may be prescribed. So, if central government want any additional information or want any additional statements, then they can ask for that statements and information to the company, and company has to furnish it within prescribed time as may be told by the central government. That has given under section 148 subsection 7. At last, 148 subsection 8. This is penalty section. If any default is made in complying with the provisions. Now, whatever we have discussed from 148 subsection 1 to 148 subsection 7. If the company and every officer of the company is in default, then they will be punishable in manner as may be prescribed under section 147 subsection 1. Now, what is the penalty provision in 147 subsection 1? We will know in the further units. Okay. For now, you have to remember, if any company and every officer of company is in default of section 148, then they will be punishable under the manner of section 147 subsection 1. And if cost auditor is in default, then he will be punishable to manner as may be prescribed from 147 subsection 2 to 147 subsection 5. Not 147 subsection 2 and 5. 2 to 5. Clear? This sections will be asked as your MCQs. Okay, so you have to remember this. So far we have seen 3 sections: 148, 143 and 147. These 3 sections we have covered. Now, in this, what you have to remember is what is section 148 subsection 1 to 148 subsection 8. Now, what is section 148 subsection 1? Central government can give order to certain class of companies to include in their books of accounts related to some information of material, labor and other items of cost. If any company if any company is related to any statutory body, then what government has to do? Government has to take consent from that statutory or special act, and then they can give the order to certain class of companies. This is given under section 148 subsection 1. Now, coming to section 148 subsection 2. If central government is of opinion that this particular company is coming under the turnover and net worth limit which I have prescribed, then I can also tell the manner of conducting the cost audit for that company. This has been given under section 148 subsection 2. And 148 subsection 3 tells that cost audit can only be conducted by a cost accountant in practice who is appointed by the board of directors. And Any other auditor of the company cannot become the cost auditor of the company. Whoever the person becomes a cost auditor, he has to comply with the standards of cost auditing which are there for him. And 148 subsection 4 tells that whatever the audit which is done under section 148, that has to be conducted similar to section 143 audit. Next, 148 subsection 5. Whatever qualifications, disqualifications, rights, duties and obligations equally applicable to auditors of the company will be applicable to the cost auditor also. That is the first point. Second point is that after appointing, what is the duty of company? They have to give full access, they have to give full support for the cost auditor to do the verification of cost records and conducting the cost audit. And third point is that after completion of verification, cost auditor has to submit his cost audit report to the board of directors. Next, 148 subsection 6 tells that after cost auditor submitting his cost audit report to the company, within 30 days of his receipt, within 30 days of date of filing it to the company has to furnish it to the central government. Not only the cost audit report, with the explanation, with the additional information of all which is there in the cost audit report, they have to furnish it to the central government. This has been told under section 148 subsection 6. Next, 148 subsection 7 tells us that if after considering whatever cost audit report filed by the company, if central government wants any additional information they may call for such information, and company also has to furnish that information and explanation within prescribed time as may be prescribed by the central government. Now 148 subsection 8. This is default section. If any officer of the company or company is in default, then they will be punishable in manner as may be prescribed under 147 subsection 1. If cost auditor is in default, then 147 subsection 2 to 147 subsection 5. Clear? Clear with 148 section? Any doubts? No doubts? Okay. Now we are getting into the main topic of company's cost records and audit rules 2014. See, section 148 of Companies Act 2013. Now you know what is section 148 and what does it tell us, isn't it? See, section 148 of Companies Act 2013 gave powers to central government to make rules regarding maintenance of cost records. We have seen first it can order and then it can tell the manner of conducting cost audit also. Nothing but section 148 gave some powers to central government to make rules regarding maintenance of cost records. Not for all companies, but only for companies engaged in specified industries, manufacturing, providing goods or services. Now where this prescribed as certain companies, now where will this class of companies will get to know us? This is given under tables, table A and table B. This table A and table B I have already given in your concept book. Now what table A tells us? Table A tells us regarding some regulated sectors and table B tells us regarding non-regulated sectors. Now what are these regulated sectors and non-regulated sectors means? There are certain sectors or certain products, certain services which should be governed by the central government. Those are covered under regulated sectors. So if for both regulated sectors and non-regulated sectors, there are different limits for turnover and net worth criteria. So if regulated sectors are meeting, so whatever the products, services given under that regulated sectors table, if any company is doing that products and services, if they are meeting the turnover and net worth limit, then they have to comply with the regulations. Similarly to the non-regulated sectors also. So this kind of companies For this kind of companies, central government can make rules regarding maintenance of cost records. This power has been given by section 148 under Companies Act 2013. Now, whatever the power which is given by the, any doubt? No? No one call me? Okay. So, whatever the power given by the central government, whatever power given to the central government by section 148, we call it as subordinate legislative power. Remember this word called as subordinate legislative power. Now, whatever the power is within the central government is called as subordinate legislative power. And we have primary legislation. Now, what is this primary legislation and subordinary legislation is? Primary legislation is nothing but Companies Act. Now, this Companies Act is the main head. So, it has given us certain law, rules, regulations, everything. It has everything in it. Now, what this subordinate legislation can do? It can make small changes in it. Now, if after looking into certain industries records and certain industry statements and information, if central government thinks that whatever the law which is there in the Companies Act is giving some lenience to that particular company. Now, what central government can do? Only for that particular industry, they can change the law which is there. They can't change the entire law, but they can change some points which are giving lenience to that particular industries. Now, this central government power is only for specified industries, not for all industries. For specified industries, what central government can do? Whatever the act is there, in that particular act, there are already laws, rules and regulations which act should be followed by all companies. Now, in that also, certain industries are becoming some lenient because of the law. Because of some loopholes, they are getting lenient. That has been known to central government. Now, can central government make small changes to it? Yes, central government can make small changes to the act and that can specify it to this specified industries. This power has been given to the central government by Companies Act itself under section 148. Okay. Now, primary legislation is nothing but me. For example, I am there and I am giving the power to you that you can make changes in whatever material I have given to you. Now, whatever material I have given to you, I have given everything in it. Now, whatever I am going to take in my particular class or whatever you have in your syllabus, I have given everything that in your concept book. Now, what I am telling, I have given power to you that you can make any changes that you want. Now, I am not telling you to make the changes in my book which I have given. If you are making changes, then it's only your book changes, isn't it? Who is going to see that? Only you. Who is going to prepare from that? Only you, which is only applicable to you. So, if you are making any changes, it is only applicable to that specified industries, not to all industries. So, central government can make small changes only for that particular limit. So, whatever the power which is given is called as subordinate legislation power. Now, who is the primary legislation here? Companies Act is the primary legislation. Primary legislation is the act that has been passed by the Parliament, which is our Companies Act. Now, what is the subordinate legislation? Central government is the subordinate legislation, which has only power to make small changes to the act. Now, what is the subordinate legislation power? It is the process by which executive is given power by primary legislation to make laws in order to implement and administer the requirement of primary legislation. Now, who is this primary legislation? Companies Act, isn't it? So, this legislation power by the central government, it is a process. It is not a one-time thing. Now, if for this particular financial year, central government thinks that this is enough, it will keep it. In the next financial year, if they want to make any further changes, they'll do. It is not a one-time thing. The act, whatever is passed in the Parliament, it is one-time thing. If they want to revise again, then that's different. Now, whatever Parliament Act has passed, that is one-time thing. It is one-time process. But whatever the power which is given to the central government, it is a continuous process. It will be done from timely basis. So, it is the process by which executive is nothing but central government in this case, is given powers by the primary legislation, which is Companies Act, to make laws in order to implement and administer the requirements of primary legislation. Now, whatever the act is telling us, some people might know about it, that this is legal, we have to only comply with the legal provisions. Some people, what they will do, they'll see the loopholes in it, isn't it? Now, whether any act will tell you to do any illegal thing to do? No. It will only tell you to do legal only. But there might be some phrases which gives different meanings, which can give 2-3 meanings also, isn't it? Now, what people in the society do, they will take different meaning from that and they will do the activities which turns out to be fraud. So, whatever frauds which are happened till now, why they aren't proven in the society, why they are not proven in the court? Because there are some phrases which give 2-3 meanings. Just because of that, it hasn't proven till now, isn't it? They say that this is given in the act, so I have done it. So, in such a case, what's happening? The central government has given power by the primary legislation, that the act. If you see any circumstances happening like this in the society or in the market, then you can make the changes. To make the changes, the power is given by me, what is primary legislation, to you. So, it is a process by which executive is given powers by primary legislation to make laws in order to implement and administer the requirements of primary legislation. Clear? Clear till now? Now, central government from time to time can issue notifications or orders. Now, what are these notifications? Notifications are nothing but guidance or clarifications on law provisions. These are prescribed procedures for compliance and introducing changes in provisions or regulations. If they want to make or they want to give any clarification regarding any law provision, then they can issue notification for that. If they want to prescribe any procedure for compliance, like which means only for this industries, for this companies, this particular law is applicable. In that case also they can issue a notification. Or if they want to introduce any new changes in the provision or regulation, they can introduce the notification. These are nothing but to provide an information that this has made changes on it and you have to make it applicable in your records. Now, what are orders? This order is only made or specially given for one sector or one industry. Order is not applicable to each and every one. Whereas coming to notification, if any notification is issued, then it will be applicable to all. But order, it is only for one sector or one industry for which that order is being made. If I am ordering you to do something, that order is only for you, not for all in the class, isn't it? So that is order. It is a specific order passed by the government which is intended to be followed by a target group. It is not for all. Only for targeted group they have to comply with the orders which are given by the central government. Clear till now? Any doubts? No doubts? Clear? So this is the introduction of Companies Cost Records and Audit Rules 2014. Okay? Now, moving on to our main important topic. Cost Records and Audit Rules. In this, we have 6 rules. Now, what are the 6 rules? We are going to know. Rule number 1, title and commencement. Rule number 2 deals with definitions. Rule number 3 tells us regarding application of cost records or applicability of cost records. Now, for which sectors or industries cost records are applicable? That has given under Rule 3. Now, applicability of cost audit has been given under Rule 4. Maintenance of cost records is given under Rule 5 and cost audit is given under Rule 6. Okay. Now, what is Rule 1? Title and commencement. Rule number 2, definitions. Rule 3, applicability of cost records. Rule 4, applicability of cost audit. Rule 5, maintenance of cost records, and rule 6 is cost audit. Okay, these are the 6 rules which are very important. You can put how many stars you want. Okay, now rule 1, title and commencement. Now what is the title? Companies cost records and audit rules 2014 is the title. Now what is the commencement date? This has came into force as on 30th June 2014. So it has become applicable from 30th June 2014. How it has become applicable? It has been published in an official gazette. Now what is this official gazette? Is nothing but a newspaper, official newspaper of the government. Now in this official newspaper, what will happen? If any new rule, new provision or new act they are wanting to implement it, then they will give in an official gazette. So it is a legal newspaper that publishes new laws, regulations, court decisions or any legal notice. So on this date, 30th June 2016, through an official gazette, they has formed Companies Cost Records and Audit Rules 2014. Clear? So this is the rule 1. What is the title? Breakfast in Lara. What is the title? Come on. Companies Cost Records and Audit Rules 2014. What is the commencement date? 30th June 2014. This will not work in my class. I'll make you repeat everything. That is the way you will revise it. Okay? So whenever I say you to repeat it, you have to repeat it loudly. If you are repeating in your mind, I'll not be able to listen it. I don't have any mind reading senses all. Okay? So you have to tell it out loud. Rule 2, definitions. We have certain definitions which are given under this Companies Cost Records and Audit Rules 2014. Now what are these rules? We'll know. Okay? Now Act. Act means Companies Act 2013 is the act here. Customs Tariff Act heading. Now what is this Customs Tariff Act heading? As referred in first schedule, additional notes in Customs Tariff Act 1975. So there is the bare act, Customs Tariff Act 1975. In this Customs Tariff Act, there are certain additional notes. In this additional notes, first schedule, they have given us certain headings, CTA heading. Sorry. Now, regarding this, open your concept book. See, I have given you the table of regulated sectors and non-regulated sectors, isn't it? Here they have given us Customs Tariff Act heading wherever applicable, isn't it? They have given us or not? They have given us. Now, if we go to the bare act of Customs Tariff Act 1975, I think I have no internet. Oh shit. Okay. Do you all have net in your phones? Take out your phones. Open Customs Tariff Act 1975. Just type it. You'll get the bare act. See, you'll see the Indian code. You have this Indian code, Customs Tariff Act 1975 Indian code. Open that. This is around 764 pages or something. My phone is also slow. Did you open? Did you open? If you scroll down, then you will see Customs Tariff Act heading there. CTA heading. Is there CTA heading? Is there CTA heading? In that CTA heading, I know it's a lot of disturbance, but I'm sorry. See, if you are scrolling down and if you are reaching to this particular number, 2901 or 2942, 3001 and 3006, then you will be able to see drugs and pharmaceuticals in that particular thing. See, from page 29 we have started this, and if I am moving on to 3001, so these are the headings. In this particular headings, what are given? It would be nice if I'm opening here. So this is tariff item heading. The first column which is there, it is tariff item heading, and the second is description of goods. So whatever goods, whatever services are there which are given under Customs Tariff Act, everything will be there in that particular act. And next, units. If it is mentioned in kgs or liters or something like that, everything will be given, and the rate of that particular thing. If any company is getting into production of those particular goods, then they have to pay customs 30%, 25%. So what is the rate which is applicable is given under the rate column. Now, if you are going into this particular headings and see, you can go to any particular heading, then you will be able to see this particular good there. Drugs and pharmaceuticals, petroleum products, fertilizers, sugar and industrial alcohol. So why it is given as in companies cost records and audit rules also, under this regulated sectors and non-regulated sectors, they have given us specifications of certain goods and services. Now from where they have got these goods and services, we have to know. So from where they have taken these goods and services? From Customs Tariff Act. So this is nothing but a reference code for which we are seeing under this particular table. This is called as Customs Tariff Act heading. Clear? Any doubts with CTA heading? No doubts? It is given under Act. So it is given here as a reference code. That's it. So Customs Tariff Act heading, as referred in first schedule, additional notes in Customs Tariff Act 1975, it is called as Customs Tariff Act heading. Now, cost accountant in practice. Who is cost accountant in practice? He is a CMA. He has to come prepare for examination. He has to qualify all 3 levels. He has to get the certification. Then he will become a CMA. Not only after that, he has to not to go to any corporate services. He has to be in practice. He has to hold a valid COP, certificate of practice, and is deemed to be in practice, which means if you are just getting COP and doing practice as a part-time job, then that will not be okay. You have to be in full-time in practice. then only that will do. CMA holding valid certificate of practice and he is deemed to be in practice. Here, whatever the cost accountant in practice we see under this particular company CRA rules 2014. So under this company's cost and audit rules 2014, wherever we see cost accountant in practice, it also includes firm LLP. Okay, so partnership firm and limited liability partnership. Both will be included under cost accountant in practice. But the rule is that wherever the partnership firm is there or LLP is there, the members and partners, majority should be CMAs. If in that particular LLP and firm, majority members are CMAs and those CMAs are into practice and holding COP, then the entire firm, entire LLP will also be considered as cost accountant in practice. Clear? Clear? Now, who is cost auditor? CMA in practice. We have seen definition of cost accountant in practice. So, if he is a cost accountant in practice, then he will be a cost auditor. Here the additional point is that he has to be appointed by the board of directors. CMA in practice who is appointed by the board of directors, he will be a cost auditor. Now, cost audit report. Now, what is cost audit report? It is a report which is duly signed on cost records and cost statements. Now, what will cost auditor do? He will just come, sit in AC room, in rolling chair, he will do round and round and he will sleep. Is it what his work is? No. What he will do, he'll come, do the verification of cost records and cost statements. After verifying cost records and cost statements, he will prepare a report. That report has to be duly signed. If it is a report which is duly signed on cost records and cost statements, prepared as per rules, that is called as a cost audit report. Includes annexures, these is annexures, qualifications, observations. Now this is full of mess. Wait a minute. Now, cost audit report is nothing but a report which is duly signed on cost records and cost statements and prepared as per rules. This includes attachments, annexures, qualifications, observations included in such report. Now, what are these terms referred as? Now, what are attachments? Attachments are nothing but whatever the cost records are there and cost statements are there, they are done following certain policies, standards, isn't it? So, whatever the policy which is followed in that particular record or statement, that has to be attached. It is called as an attachment. So, additional document, example cost accounting policies, detailed cost statements. Now, whatever it is there in that cost audit report, it will only be understood by the cost auditor and certain professionals. It will not be understood by each and every one. So, to make everyone understand, certain attachments has to be done, which means in detailed report of that. Now, what is there in that report, cost audit report, that has to be made understand to each and everyone. So, there are certain attachments which has to be made, giving certain policy details, standard details which they have complied with in that particular audit report. So, regarding all that, they have to give some additional documents which are called as attachments. Now, what are annexures? Annexures are supplementary schedules, tables. Are you being able to see that? If not, you have to tell that, ma'am, please zoom. I'll zoom. Okay, I'll not charge for it. This is for free. Okay. If you are having any doubts, then you can ask. If you want anything to be done by me, if you want any clear explanation, if you want to zoom in, if you want to write anything, then you can ask. It's for free. It's not for charging. Okay. Now, annexures is supplementary schedules or tables which are to be given under the cost audit report. These are details of production, sales, inventory and breakup of cost elements. So regarding this, if any schedules are being made under the cost audit report, then that will be called as annexures. Okay. What is this regarding? This is regarding about production, sales, inventory and cost elements information. Regarding that information, we are preparing a proper schedule and giving in that cost audit report. Those will be called as annexures. Clear? Now, qualifications. Qualifications are nothing but remarks. Now, the entire cost records is okay. The entire cost statement is okay. But cost auditor is having a single remark in one particular product or one particular project. Now, entire cost records and cost statements are true and fair. But what cost auditor has done? He has some doubt or some misunderstanding regarding a product. Now, cost auditor has asked regarding that product information to the management, and management didn't give any information which is satisfiable to the cost auditor. Now, what he will do? He'll give that as a remark in his cost audit report if he is not satisfied with the information which is given by the management. Now, any remarks to highlight issue and concerns. Example, non-maintenance of records, material discrepancies, non-compliance of cost accounting standards. If they have not complied with any cost accounting standard, if they find any differences between the record and the actual statement, if they find that records are not properly maintained, then cost auditor can give it as a remark in his cost audit report. Those will be called as qualifications. Next, coming to observations. Observations are nothing but while doing verification of cost records and statements, what did he has observed. Now, cost auditor, what is his comments and findings in that particular verification. If there are any inefficiencies in production process, then he will tell that in that cost audit report. Now, cost audit report does not only include the statement which is prepared by the cost auditor, which is called as a cost audit report. It will also include the attachment, annexures, qualifications, observations. Including all this, if it is duly signed report, then that will be called as a cost audit report. Clear? Clear with the definitions, whatever we have covered till now? Act, Customs Tariff Act heading, cost accountant in practice, cost auditor, cost audit report. Clear with 5 definitions? Any doubts? No doubts? Okay. Now next, cost records. What are cost records? Books of accounts relating to utilization of material, labor and other costs relating to what? Production of goods or providing of services. So there are production of goods or services. Now for that we use material, labor and other costs. Now regarding all those, if how the material, labor or any other expenditure is being utilized, regarding that information, if you are putting in any record, then that is called as cost records. Okay. So these are books of accounts relating to utilization of material, labor and other costs relating to production of goods or providing of services. Now form, what is form? If any form, it is annexed to cost audit report or the report which is prepared by the cost auditor, it is called as form. Okay. Now what are these forms? How many kinds of forms is there? We will see in this particular unit in the further. Now what are Ind AS? You already know Ind AS in accounting standards. Now Ind AS referred in companies Ind AS rules 2015 is the Ind AS which is given in the company's cost records and audit rules 2014. Now what is institute? ICWI, ICAI institute, whatever we have, that is institute under this act. Clear? Any doubts with the definitions? No doubts? In these definitions, what are important is cost accountant in practice definition, cost auditor definition, cost audit report and cost records. These 4 definitions are important. Okay. Clear with rule 1 and rule 2? Any doubts with rule 1 and rule 2? No doubts, right? Now, moving on to main important rule. This is the important rule, okay? Rule number 3, applicability of cost records. Applicability of cost records. Now, whether all companies has to maintain cost records? The answer is no. Only some specified industries which are specified under tables, regulated sector and non-regulated sectors, they have to comply with cost records. Now, maintenance of cost records by companies. It can be a domestic company, it can be a foreign company. There is no bifurcation that only domestic company has to comply with cost records. No. Domestic company or foreign company engaged in production of specified goods or providing services which are given under regulated sectors and non-regulated sectors table, those are specified goods or services. If they are engaged in production of specified goods or providing of certain services, then which are covered under regulated sector and non-regulated sector, and if their overall turnover from all products and services in immediate preceding financial year. Now, what cost audit will be done? Now, when cost audit will be done? For which statements cost audit will be done? Previous year cost records and cost statements which are prepared. For that, in the current year, cost audit is done. This is clear, no? You don't have any doubt in that. Now, if production of goods are done and services are provided, and from that the industry or the company has gained a turnover and the net worth more than 35 crores in the preceding financial year, combining all products and services, and the limit should be more than or equal to, not only more than or equal to 35 crores in the immediate preceding financial year, then they have to maintain cost records. Clear? It can be a domestic company or a foreign company. So, maintenance of cost records by companies, domestic or foreign, engaged in production of specified goods or providing of services, which are given under regulated sector and non-regulated sectors. Overall turnover from all products and services should be more than or equal to 35 crores in the preceding financial year. Then they have to maintain cost records. Clear? Now, what is given under this regulated sectors and non-regulated sectors table? We'll see. Okay. Now, what is given under regulated sectors table? Regulated sectors table is only categorized into 6. Non-regulated sectors table is given till 33, I guess. Yes, 33. Okay. Now, the major question. Ma'am, do we have to remember both the tables? The answer is yes. You have to remember. Shit. What is this? Ma'am, yes, you have to remember whatever which is given under this particular table. If not, I'll not give that in your books, right? So this is important. You have to remember. Now, I can give you a tip for that. Now, how you will guys remember? Now, in your question paper, whatever the question is given, that will be from regulated or non-regulated sectors table, isn't it? He'll not bring it from any other outside and so. So what you have to do is remember just the 6. If anything which is there from the 6, then that is regulated sector. If anything which is not there from the 6, that is from non-regulated sectors. Now, I'm not telling you to just skip entire non-regulated sectors table. Okay? Just see it once or twice. When you're going through, just see whatever which is there in that non-regulated sector, 33 headings. But the major thing is you will not be able to remember each and every heading which is given under 33, isn't it? So what you have to do is Just revise once or twice, but be thorough with the 6 which is given under the regulated sectors. Okay. So whenever the question is being asked, you will be able to identify, yes, this is some point which I have remembered that it is there in non-regulated sectors. It is not in non-regulated sectors, but I remember that it is there in non-regulated sectors because I have revised once or twice. Okay. This is not selective study. Okay. I'm not telling you to entirely skip that concept. I'm telling you to see once or twice, but majorly depend on regulated sectors. Okay. It is just doing smart work rather than hard work. Okay. Now, regulated sectors. First is telecommunication services made available to users by means of any transmission or reception of signs, signals, writing, images, sounds, or intelligence of any nature, regulated by Telecom Regulatory Authority in India. Now, whatever the form is, it could be a text, it could be a picture, it could be a sound, it could be a sign, or it could be a call, whatever it is. No, it's still 11. Yeah, 9 to 11. Okay. Okay. So, telecom services, whatever it is, it could be just a call, it could be a signal, it could be writing, image, sound, which are given by Telecom Regulatory Authority of India. Those are regulated sectors. Generation, transmission, distribution, supply of electricity regulated by relevant regulatory body or authority under Electricity Act 2003. Next, petroleum products including activities regulated by the Petroleum Natural Gas Regulatory Board under the Petroleum and Natural Gas Regulatory Board Act 2006. Fourth is drugs and pharmaceuticals. Fifth is fertilizers, and sixth is sugar and industrial alcohol. Now what is first? Telecommunication services. Second is, just remember, electricity. Okay. First is telecommunication services. Second is electricity. Third is petroleum products. Fourth is drugs and pharmaceuticals. Fifth, fertilizers. Sixth, sugar and industrial alcohol. Clear? Repeat again. First is telecommunication services. Second is electricity. Third, petroleum products. Fourth, drugs and pharmaceuticals. Fifth is fertilizer. Sixth is sugar and industrial alcohol. From tomorrow onwards, try to add more to idlis in your breakfast. Okay? Now, non-regulated sectors. Machinery and mechanical appliances used in defense, space, atomic energy sectors, excluding any ancillary items. For the purpose of this subclause, any company which is engaged in any item or items supplied exclusively for use under this clause shall be deemed to be covered under these rules. Which means not all machinery and mechanical appliances they are telling. Only those machinery and mechanical appliances which are used in defense, space, atomic energy sectors. Next is turbojets, turbopropellers, arms and ammunition and explosives, propellant powders, prepared explosives other than propellant powders, which is already covered here, safety fuses, detonating fuses, percussions, detonating caps, igniters, electric detonators. What are these words one by one? You need not to know. Okay? If you want to know, go home, search it in Google and know about each and every word. Okay? So, if you see this particular name in your question, then that is coming from non-regulated sectors. Okay? If you have interest that I have to know what all this, then you can. Radar apparatus, radio navigational and apparatus and radio remote control apparatus, vehicle tanks and other armed fighting, motorized whether or not fitted with weapons, parts of such vehicles. So whatever fighter engines will be there, like vehicle tanks or armed fighting, they'll use all the arms and ammunitions in that particular vehicles. Even if it is armed or even if it is not armed, if that vehicle is there, then that is considered under non-regulated sectors. Okay, that are funded investment made in company to the extent 90% or more by the government or government agencies. Post services of stevedoring, pilotage, hauling, mooring, remooring, hooking, measuring, loading, unloading. Rendering for port in relation to vessel or goods regulated to tariff authority for major ports under the Major Port Trust Act 1963. So it is related to port services. Okay. Next is aeronautical services, iron and steel, roads and other infrastructure projects, rubber and allied products, coffee and tea, railway or tramway locomotives, rolling stock, railway or tramway fixture and fittings, mechanical, traffic signaling equipment of all kinds. Next is cement, ores and mineral products, mineral fuels other than petroleum, because petroleum is covered under a regulated sectors. Mineral fuels, mineral oils, base metals, inorganic chemicals, organic or inorganic compounds of precious metals, rare earth metals of radioactive elements or isotopes, and organic chemicals, jute and jute products, edible oil, construction industry, health services, educational services, milk powder, insecticides, plastics and polymers, tires and tubes, pulp and paper, textiles, glass, other machinery and mechanical appliances, electricals or electronic machinery. Next, coming for medical devices like cardiac stents, electing stents, catheters, intraocular lenses, bone cements, heart valves. These are all medical services. So whatever the medical devices which will be there, these are covered under 33rd heading. So whatever we have seen, try to revise once or twice, only those names to just remember if it is in front of you. So whatever we have discussed, everything is covered under non-regulated sectors table. What is covered under regulated? Without seeing. Telecommunication, electricity, petroleum products, drugs and pharmaceuticals, sugar and industrial alcohol last, fertilizers. Now, in this regulated and non-regulated sectors table, we have seen products and services, isn't it? If any company is into production of these products or providing of these services, and in its immediate preceding financial year, if its turnover is more than or equal to 35 crores only from these products and services, then those kind of industries have to maintain cost records. Clear? And this cost records maintenance does not apply, which means exceptions are there, only for two. First is foreign companies having only license office. What does it mean by license office? It is an office where it is only a connection or bond. License means connection or bond. Okay. Now, license office is nothing but a representative office. For example, there is a foreign company which is a parent company and its business partner is in India. Now, this business partner, whatever is done, this will do the operations, isn't it? And this parent company will do the operation. Now, the business is done in this foreign company and this Indian company. But whatever the information or materials, now whatever work which has to be done between the India and foreign company, there needs to be some mediator to handle both the companies, isn't it? So that mediator will be this representative office which is called as liaison office. Now in this liaison office, operations will not be done, business will not be done, There will be no profit, no loss. This license office is only there to facilitate the working relation between the parent company and the Indian company. So those kind of offices where it will only be a connection between the two companies, that kind of companies will be called as liaison office. Okay. So if there is any liaison office, then for those kind of liaison offices, cost records maintenance is not required. Cost records need not be maintained if a foreign company having only a liaison office in India. If it is having the other office where business and operations are being done, then in that particular office, it has to maintain cost records. But for liaison office, it need not maintain. Clear? Now, second is company is classified into micro enterprise or small enterprise under MSME. Under MSMED Act. Do you know MSMED Act? MSMED. Interest adalada? Micro, small, medium enterprises. Now we have MSMED Act, Micro, Small and Medium Enterprises Development Act, which is brought in 2006. So in this, they have given the categorization of micro enterprise and small enterprise. If any company is classified into micro enterprise or small enterprise, then they need not maintain what? Cost records. So these are the two exceptions which we have for cost records maintenance. Other than these two, any company which is classified or which is segregated into regulated sectors and non-regulated sectors, and in its immediate preceding financial year, if the turnover limit is more than or equal to 35 crores, then they have to maintain cost records. This is given under which rule? Which rule we have seen now? Rule 3. Now rule 3 is applicability of cost records. Clear with rule 3? Any doubts? Exception is important, limit is important. How much is the limit? More than or equal to 35 crores. Don't say 35 crores. Whenever I ask limit, say more than or equal to 35 crores in the immediate preceding financial year. Okay? If in your exam you are just writing 35 crores, only writing more than 35 crores will not get marks. You have to write completely more than or equal to 35 crores in the immediate preceding financial year. Okay? Don't write as I have written here. F.Y, pre, immediate, IMM. No. That's only for book reference. In your exam, you have to write immediate preceding financial year. Okay? Now this is rule 3. Clear with rule 3? Now, coming to rule 4, cost audit. Okay? Now, whether if a company is maintaining cost records, do they have to do cost audit compulsorily? The answer is no. If the turnover limit is more than or equal to 35 crores from the products or services in the preceding financial year, then they have to maintain cost records. But even after that, if they are into this limits, only then they will do the cost audit. If not, cost audit is not required. Okay? Cost records they have to maintain. Cost audit they need not to do. Okay? Now, this is regarding limits. If you want to see, I'll give you the notes, then you can see. Okay? This is not so required for us. For micro enterprise and small enterprise, whatever the limit which is given under the MSMED Act, this is. Okay? If investment is less than 1 crore and turnover is less than 5 crores, then it is micro. If the investment is less than 10 crores and turnover is less than 50 crores, then that is small. Now, coming to this, regulated sectors, non-regulated sectors. If any product or service is there in regulated sectors, now whatever we have seen those 6, if a company is only engaged in those 6, and if the turnover, overall turnover during immediate preceding financial year is more than or equal to 50 crores. Overall turnover, which means that company can do the production of products which are there in regulated sectors table. It can also do the production of goods which are given in the non-regulated sectors table. It can do production or services which is not at all given in both the tables, isn't it? So it can be 3 products. One which is covered under regulated sectors, one which is covered under non-regulated sectors, one which is not at all covered under this 2. So whatever combinedly overall turnover is that, the overall turnover in the preceding financial year should be more than or equal to 50 crores. And this is not or, it is and, okay? And the aggregate turnover of individual products or services. So whatever the product which is covered under regulated and non-regulated, only products which are covered under regulated and non-regulated sectors, aggregate of that 2 products, if the aggregate turnover is more than or equal to 25 crores. Then for regulated sectors, they have to comply with cost audit. Okay. Cost records will be maintained if it is more than 35 crores. But cost audit will be done only if aggregate turnover is more than or equal to 50 crores and aggregate, this is overall turnover. If overall turnover is more than or equal to 50 crores and aggregate turnover of individual products or services is more than or equal to 25 crores. Clear? Now coming to non-regulated sectors, if this 2 is satisfied, then they have to do cost audit only for the products which are covered under regulated sectors. Okay. Now, if non-regulated sector product is there, then overall annual turnover should be more than or equal to 100 crores. Aggregate turnover of individual products or services should be more than or equal to 35 crores. Now, if any company is complying only with these 2 criteria, then they have to do only the cost audit for regulated sectors, goods and services. Now, if a company is complying with only this 2, then it will also comply with this 2, no? Because here the limit is more, 135, here it is less compared to this 2, isn't it? Now, if any company is complying with all those, then it has to do cost audit for entire products and services, not only which is related to regulated or non-regulated. Okay. Here, if it is only complying with these 2 limits, then it has to do only cost audit for products which are given under regulated sectors, which is table A. But if it is complying with all 4 limits, then it has to do cost audit for entire company's cost records. Clear? Any doubts? No doubts? Let us understand this with examples. I have given you many examples in this. These are solved cases. Okay. Now, you will give the answer for this. Ready? You ready to give the answer? Somewhat loud, please. Even think as I'm old, I don't have my hearing sense so much. Okay. Case 1. XYZ Limited Company. Information is given to us as turnover of table A products are 6 crores, turnover of table B products are 9 crores, and turnover of other products are 18 crores. Now first we'll see cost records are applicable or not. Okay. Now, rule 3 is regarding cost records, right? Now what is the limit? Overall turnover, it is not individual, right? Overall turnover should be more than or equal to 35 crores, isn't it? Now, is it more than or equal to 35 crores? No, it is only 33 crores, which means cost records need not be maintained. If cost records are not there, for which records cost audit will be done? No. So cost records are not there, so cost audit will not be done. So we know not to go for rule 4. Okay, rule 3 is done. Clear? Any doubts? No doubts? Overall turnover is 33 crores, which is less than or equal to 35 crores. Conclusion, cost records are not required to be maintained for table A and table B products. Cost records are not maintained. There is no question of conducting a cost audit. Now, case 2, ABC Limited. Turnover of table A products are 7 crores, table B products are 8 crores, and other products are 24 crores. Now, whether is it more than 35 crores? Yes, it is. How many crores? 39 crores. So, cost records has to be maintained, isn't it? Cost records has to be maintained. Now, coming to rule 4. First, we'll see regarding regulated sectors. Now, what should be the overall turnover? More than or equal to 50 crores should be the overall turnover. Now, whether the overall turnover is more than or equal to 50 crores? No. So, the overall turnover is not more than 50 crores. Now, regarding individual products, whether is it more than or equal to 25 crores? No. Here, individual will not only see regulated, we'll see combinedly regulated and non-regulated. Okay. So, combinedly regulated and non-regulated, is it more than or equal to 25 crores? No. So, first two didn't satisfy. So, only cost records has to be maintained. Cost audit will not be done. Overall turnover 39 crores, more than or equal to 35 crores. Conclusion, cost records are required to be maintained for table A and table B products. Now, coming to cost audit under rule 4. Overall turnover is 39 crores, more than or equal to 50 crores. Aggregate turnover of table A and table B products are 15 crores, which is less than 25 crores. Conclusion, since the aggregate turnover of table A and table B products is less than the threshold limit of 25 crores, cost audit is not applicable. Clear? Now, coming to BK Private Limited. Table A 11, table B 14, other products 28. Overall, it is 53 crores. So, first rule 3. What is the limit for rule 3? More than or equal to 35 crores. So, it is more than or equal to 35 crores. So, cost records has to be maintained. Now, coming to rule 4. First is overall turnover should be more than or equal to 50 crores. So, the first limit is satisfied. Second, overall should be how much? More than or equal to 25. It is exactly 25. So, we have not only more than, we have more than or equal to. So, what two limits which are given under regulated sector is satisfied. Now, coming to the non-regulated. What is the non-regulated turnover limit? Overall should be more than or equal to 100 crores. Aggregate individual should be more than or equal to 35 crores. Now, it is not 100 crores overallly, and aggregately also it is only 25. It is not equal to 35. So, for non-regulated products, no need to do cost audit. But for regulated products, cost audit has to be done. Cost records under rule 3. Overall turnover 53 crores, more than or equal to 35 crores. Conclusion, cost records are required to be maintained for table A and table B products. Cost audit under rule 4. Overall turnover 53 crores, more than or equal to 50 crores. Aggregate turnover of table A and table B products 25 crores, which is more than or equal to 25 crores. Sorry. Now, what is the conclusion? Since the condition of rule 4 subsection 1 are fulfilled, cost audit is applicable only for table A products. Clear? Now, coming for case 4, Sun Enterprises Limited. Table A is 19 crores, table B is 15 crores, and the other products is 76 crores. What is the overall total? 110 crores is the overall total. Now, first is rule 3. Overall is more than or equal to 35 crores. Cost records has to be maintained. Now, coming to rule 4. First, regulated sectors. What is the turnover for overall turnover? More than or equal to 50 crores. Now, what is aggregate individual turnover? More than or equal to 25 crores. Now, whether the overall is more than or equal to 50 crores? The answer is yes. Whether the individual is more than or equal to here 19, here it is 15. So, it is more than 25 crores. So, first limit is satisfied for regulated. So, cost audit has to be done for regulated sectors. Now, coming for non-regulated. More than or equal to how much should be there for overall? 100 crores. Overall it is 110. So it is satisfied. Individual products should be 35 crores. So here it is only less than 35, which is not equal to 35. So cost records under rule 3, overall turnover is 110 crores, which is more than 35 crores. Conclusion, cost records are required to be maintained for table A and table B products. Cost audit under rule 4, overall is 110 crores, more than 100 crores. Aggregate turnover of table A and table B products are 34 crores, which is more than 25 crores but less than 35 crores. Conclusion, since the condition of rule 4 subsection 1 are fulfilled and aggregate turnover is less than 35 crores, cost audit is applicable for table A products only, because that is and, not or. 100 crores limit is satisfied, but 35 crores limit is not satisfied. So it is not applicable for table B, only applicable for table A. Clear? Now case 5, turnover of table A 20 crores, turnover of table B 22, turnover of other products is 63. Overall it is 105. So cost records is rule 3 satisfied, more than or equal to 35. Now rule 4, regulated means more than or equal to 50, satisfied. Aggregate 25 more than or equal to, how much it is? 20. 20 and 22 it is 42. So more than or equal to 25. Now for non-regulated, limit is 135. Here it is 105 more than 100. Here it is 42 more than 35. So all the limits are satisfied. So cost audit has to be done for entire cost records. Now, cost records under rule 3. Overall turnover is 105, more than 35 crores. Conclusion, cost records are required to be maintained for table A and table B. Cost audit under rule 4, overall turnover is 105, which is more than 100. Aggregate turnover of table A and table B is 42, which is more than 35. Sorry. Conclusion is, since the condition of rule 4.1 and 4.2 is satisfied, cost audit is applicable for both table A and table B products. Clear? Any doubts? Clear, right? Rule 1, rule 2, rule 3, rule 4 clear? Any doubts? No doubts? Clear? Limits are important. Try to remember. What is rule 1? Title and commencement. Rule 2? Rule 3? Applicability of cost records. Rule 4? Applicability of cost audit. Now, in rule 4 also we have certain exemptions as we have in rule 3. What are rule 3 exemptions? Exemptions for which companies' cost records are not needed. Micro enterprise and small enterprise, then it is not required. And second is foreign company having only license office in India. For this too, cost records need not be maintained. Now coming for cost audit, the exemptions are 3. First is non-applicability of rule 4. Only rule 3 will apply. Now, if the rule 3 is satisfied and it is not covered under the exceptions of rule 3, which means the entire rule 3 provision is satisfied. But when it comes to rule 4, these are also satisfied, but it is covered under this exemption. Then rule 4 is not applicable, but rule 3 will be applicable. Okay. We should not combine both rule 3 and rule 4. Rule 3 is separate, rule 4 is separate. If rule 3 is applicable, it is applicable. If rule 4 is applicable, it is applicable. Now, regulated sectors, non-regulated sectors. If company, if its revenue from exports, which is foreign exchange revenue, if it is more than 75 crores of total revenue, which means entirely the company is doing only imports and exports from the foreign. So whatever it is doing, the production that is being sold to the foreign market only. So the revenue which is being generated is entirely foreign exchange revenue. In that case, if total revenue consists of more than 75% of foreign revenue, like means foreign exchange revenue, then for that companies, cost audit is not required. Only maintenance of cost records is enough. Why this provision has brought? Because imports should be reduced, exports should be increased. For only that criteria and that motive, this provision has been brought. Rule 4 is not required, rule 3 is required. Companies if operating from special economic zone. You know the special economic zone, right? So if they are only doing from special economic zone, then to increase the facilities for special economic zones, this provision has been brought. Rule 4 is not required, rule 3 has to be complied with. And next, the third exemption is, if any company is engaged in generation of electricity for captive consumption through captive generating plant. What is captive consumption? Captive consumption means whatever production is being done, in that particular production, more than 55% is self-consumed. Okay? If whatever the owner is there, this is only related to electricity, not for all. If any power generation is there, electricity generation company is there, and in that electricity is being generated, no? From that electricity whichever is generated, more than 51% electricity is being consumed by that plant itself. In that case, such plants will be called as captive generated plants. If any company is engaged in generation of electricity for captive consumption through captive generating plant, meaning is goods manufactured by one division or unit consumed by another division or unit for producing another product. So captive consumption through captive generating plant, CGP is captive generating plant. Owner of power plant uses at least 51% of electricity generated for own consumption. So whatever electricity is generated, from that 51% is self-consumed. Then for those kind of companies, the rule 4 is not required. Means cost audit need not be done. Cost records maintenance is enough. Okay. So what are those three exemptions? If total revenue consists of 75% of foreign exchange, then rule 4 is not required. Second is, if company is operating from special economic zone. Third is, if company is engaged in generation of electricity for captive consumption to captive generating plant. Then for this 3, rule 4 is not applicable, rule 3 is applicable. Clear? Any doubts with rule 4? Any doubts with rule 3? No doubts? Okay. We'll finish this rule 5. In tomorrow's session, we'll go to rule 6. Okay? Because rule 6 is somewhat big. We have only 10 minutes, like 8 minutes time. Now, rule 5. Maintenance of cost records. Now, for which companies cost records should be maintained, we have seen in rule 3, isn't it? Now, from when they have to maintain cost records given under rule 5. For companies, units and branches, they have to maintain it in form CRA1. Okay. Maintenance of cost records is to be done in form Form CRA 1. For each financial year on or after 1st of April 2014. Now from when this has been bought? 2014, 30th June, right? So any company which is into production and distribution, like production or providing of services from 1st of April 2014, then from that date they have to do maintenance of cost records in form CRA 1. Clear? Only for non-regulated sectors, only for this 4: coffee and tea, milk powder, electricals, electronic machinery. Only for this 4 the date has been changed. 1st of April 2015, not 2014, but 1 year later, 2015. From this date, these also shall do cost records maintenance in form CRA 1. Clear? This is only regarding date and maintenance. Maintenance of cost records is given under which form? Form CRA 1. Maintenance of cost records facilitate calculation of per unit cost of production or operations. Now, if we maintain cost records, what will happen? We'll be able to know per unit cost of production or operations. Now, in the entire production, what will be the per unit cost for me? I'll be able to know for each and every product if I do the cost records. Cost of sales and margin for all products and services. Now, I'll be able to know cost. I'll be able to know about sales. I'll be able to know about margin. For every year, on monthly, quarterly, half yearly, annually basis. Now, whenever I want to know about the per unit cost, I'll do cost records verification and be able to know it. Clear? Maintenance of cost records facilitate calculation of per unit cost of production or operations, cost of sales and margin for all products and services. For every financial year, on monthly, quarterly, half yearly, annual basis. Clear? Now, maintenance of cost records helps company to exercise control over various operations, control over cost to achieve optimum utilization of resources, and to provide necessary data which is required to furnish under the rules. Now, if cost records are being maintained, see, for example, if cost records are maintained by the company, then I'll be able to know what is per unit cost. With this, I'll fix what will be my sale value or sale price. And if there is a sale price, there will be some profit margin, isn't it, in that sale price? So I'll fix that what is profit margin for me. And I can do it not only once. Whenever I want, I can do it quarterly, half yearly, annually, or timely basis whenever need. Not only this, see, I'll be able to know what is the exact cost for each and every product, isn't it? Now, if I want to control any cost of one particular element or one particular product or one particular unit, will I be able to do it or not? I can do it, right? So it is nothing but control over various operations. If I know what is the cost in each and every operation, I'll know which operations are in higher cost. Isn't it? Getting or not? If I know what is the cost which is incurred by me for each and every operation, then I'll be able to know which operations are having higher cost. Isn't it? Now what I will do, I'll implement those kind of techniques to reduce that particular cost, which means I have control over each and every operation. So I can control cost, I can fix the profit which I'll get, I can fix the sale price. So I will have control over various operations. Second, control over cost to achieve optimum utilization of resources. I can able to control cost, at the same time I'll tell you how much resources has to be utilized. there should not be have overutilization or underutilization. The resources has to be utilized in an optimum way. Third, to provide necessary data which is required to furnish under this rules. Now, if cost records are there, if cost records are to be maintained, then you have to furnish it to the government. Like through the cost audit has to be done. He has to verify cost records. Cost audit report has to be done. That has to be furnished to the central government. Which means what? They have to furnish it under these rules. Will that be possible if there is no cost records? No. So cost records will be done so that it will help to furnish it to the government. So these are the 3 points. First is which will have control over operations. Second, control over cost to achieve optimum utilization of resources. And third is to provide necessary data which is required to furnish under these rules. Clear? This is given under Rule 5. Any doubts with Rule 5? No doubts? So yes, just go through whatever we have seen. Close your eyes, just revise whatever we have seen till now. Okay? Do you have next class? No? Revise it after you go home. Or else after going home, you'll just close your eyes and sleep. See whatever we have seen. We have seen the introduction of companies cost records and audit rules 2014. We have seen regarding section 148. And then we have seen regarding rules. Rule 1, Rule 2, Rule 3, Rule 4, Rule 5. And in these rules, we have come across one form. Form CRA 1, which is maintenance of cost records. Clear? No doubts, right, so far? Okay. Try to revise whatever we have discussed. I'll forward the handwritten notes. Okay. Try to revise whatever we have seen. And tomorrow we'll see Rule 6 and we'll go to the forms. Okay. Okay.